Hello, everyone, and thank you all for joining us during the Lytham Partners Spring 2023 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. Before we begin, for those not familiar, Lytham Partners is one of the country's leading investor relations firms with more than 2 decades of corporate access experience. We have built one of the industry's most diverse and effective platforms for connecting small-cap companies with high-quality and focused institutional investors while creating a framework of best practices in all aspects of investor relations. Today's discussion is hopefully yet another example where we can bring value to multiple constituents. Our next presentation comes from LiveWorld, ticker symbol of LVWD, that is Lima Victor Whiskey Delta on the OTC. Presenting from the company today is its founder, chairman, and CEO, Peter Friedman, and its CFO, David Houston. Today, I've asked Peter and David to briefly run through the slide presentation and then engage in a Q&A session. We will dive into the discussion in a moment. For one more final item, I want to remind everybody that LiveWorld is available for one-on-one meetings. And if you have not already signed up, please send me an email at lowensteiner@lythampartners.com or visit www.lythampartners.com/virtual and click the one-on-one meeting request button. With that said, let me now turn the presentation over to Mr. Peter Friedman, founder, chairman, and CEO of LiveWorld. Peter, please proceed.
Thanks, Adam. Before we do anything else, here's our safe harbor statement. We always have to start with that. I am Peter Friedman, founder, chairman, and CEO, and joining us is David Houston, our chief financial officer. We'd like to begin by giving you an overview of our business and financials. LiveWorld is a full-service digital agency with particularly deep expertise in creative, technology, social media, and compliance. Essentially, we create digital marketing campaigns for our Fortune 500 clients and then manage their social media presence. The focus is to create emotional connections that build relationships between the brand and their customer so that our clients can meet their objectives in marketing, customer support, and reaching healthcare outcomes. Let's look at specifically what we do. This breaks into 3 parts. Creative is where we get paid to produce marketing campaigns, advertising, and that's about 20% of our business, and it comprises all the different items listed in this chart and reflects our expansion over the last several years into being a full-service digital marketing agency. Moderation, which comprises about 70% of our business, is a high-margin annuity revenue stream in which we manage user content on social media for our clients. This includes managing adverse events for pharmaceutical companies, keeping social media pages for our clients clean of bad content, and actually interacting with our clients and customers to build relationships and drive sales. The third part is technology, where we get paid to provide the software that we use to manage all that user content online, licensing it to the client, and then we use it on their behalf, or their internal people use it. And we also build apps for digital marketing campaigns. Currently, this is about 10% of our business, and it's a SaaS software license annuity revenue stream. As we look at the value that LiveWorld provides, we feel more than anything else, understanding that day-to-day and long-term is reflected in the longevity of our client relationships. 16 years with American Express, 13 with Pfizer, over 9 or 10 each with Zoetis, Bristol Myers, and FedEx. Today, we work for 75 different brands spread across 25 corporate clients. And now we'll talk about our business model. David?
So our business model is very much focused on value. We create enough value for our clients that they're willing to pay us more than it costs us to do the work. Now, I know that seems like a pretty obvious business practice, but when you look across the digital social landscape, you can't see too many companies that say that they're doing this. The valuable relationships that we've created with our clients enable us to maintain strong gross margins. We also provide scale, particularly in our moderation services and our SaaS software. Our revenue mostly consists of annuity streams, annual repeating moderation contracts and SaaS software licenses, and even our digital agency work is ongoing retainer work that repeats year to year. So it's not one-off projects. It's more like a continuous annuity stream. The agency work that we do creates that strategic relationship with our client. This in turn pulls along the even higher gross margin and more annuity-like moderation and SaaS software revenue. Over the last several years, we decided to focus on a vertical market, specifically healthcare. This combined with our unique solution set has propelled our growth, with healthcare now making up approximately 90% of our total revenues. Currently, we work with the top pharmaceutical companies in the world and a major pharmacy chain in the United States. We believe that additional work from our current clients and adding new clients in pharma and medical devices can support our growth for years to come. Now, our marketing experts informed us that there are approximately 3,000 pharma companies and 1,600 medical device companies we could be working with right now. After that, we could see ourselves taking the model into a different vertical, such as financial services. So before we go into the top line financials of the company, I would recommend everyone go to our IR page and download our reports. We go into much greater detail in the Q's and K's there. LVWD, that's our ticker symbol, and we hope you get to know it. We are compliant with SEC Rule 15C to 11, so we are freely tradable. You can see that the top line revenue growth has been approximately 16, 18, and 11% over the last 3 years. Now, more importantly, we've seen growth in all of our solution areas: creative agency, moderation, and technology. Now, looking at the overall P&L, we can see that as we've grown, we've been able to keep our operating expenses in line. This has resulted in improved net income from 5% to 8% and 9% last year. We've improved our cash position as well, from approximately $730,000 at the end of 2019 to just over $3.8 million at the end of 2022. And as you can see, we're debt-free. And finally, our annuity revenue streams are approximately 70% of our total revenues. So now let's take a look at the most recent financial results. You can see that we finished Q1 with almost $2.75 million in total revenues, a net income of 5%, or about $134,000 for the 3 months ended March 31st. We've been able to maintain our double-digit growth in revenues and our profits.
At this point, we're going to go more into the business solutions, give you insight to what we actually do and how they work together. Our solution is comprised of 3 elements, which, while they can stand alone, combine to create even more value for our clients. These are creative, moderation, and technology. That we have all 3 of these is quite unique, and how we integrate them is quite unique in the marketplace. Even more so when you combine that with our depth of healthcare knowledge. Let's go into each one. The first one is creative. Creative takes the form of digital marketing campaigns that are the inspirational call to action to the client's audiences, and it sets the context for moderation and technology. A critical dynamic to understand in our business is that in healthcare, these companies need to be compliant with all kinds of regulations. And this has held back many healthcare companies from being innovative and creative, just when the market demands them to be so and be more customer-centric in their marketing, whether that's to patients or doctors. We bring a different approach with talent and expertise that allows them to be creative and still be compliant. The creative and the associated strategy work also puts us at the heart of their business objectives and strategy, and enables us to have the relationship context to really build the business. That brings us to moderation. In moderation, our live human agents, supported by technology, protect the brand by removing and reviewing problem user content. For healthcare, this is the foundation of compliance. The moderators also engage users. That activates a human touch and feel. So you start with creative as the foundation to kind of inspire people, get their attention. And then the moderation sparks conversations that build relationships, and the relationships enable you to influence behavior that causes consideration and purchase of the products. And we stimulate the users to create content themselves. And from all that, the moderation gives us insights for ideas to inform the creative and the strategy. Important to remember, moderation is a high margin revenue stream, and it's an annuity revenue stream. One key element of this is adverse events. Moderation is just a fundamental must-have for pharma companies. They can't be in social media without it. This is because they live in a regulated environment in which the Food and Drug Administration requires that all adverse events they come across are tracked and reported. An example of an adverse event is when somebody has a problem with a drug, or they're using it in a way that isn't consistent with the instructions. Like, I mixed it with this food, or I mixed it with this other drug. And that's like a big no-no. Or they say it's addicting. All those things are adverse events. Whenever a user says anything like that in front of the client, on their Facebook page, on their Instagram page, in response to an ad, in response to something they said in Twitter, that has to be marked, tracked, and then escalated through the company's systems to the Food and Drug Administration, often within 24 hours. If a company doesn't do this, and they get a letter or a call from the FDA, which does happen, that can quickly lead to an entire multi-billion, multi-tens of billions of dollars drug business being shut down in days. So it certainly gets a lot of attention to the company, and they certainly are prepared to budget and grow that capability of dealing with it because it's fundamental to their business. This brings us to the technology. Our technology enriches these connections and enables us to scale them, whether that's the moderation, user customer experience, or compliance, like managing adverse events in the right way. First, we license a SaaS platform for moderation and engagement to our clients, who then will either pay us to use it for them, or they have their own people use it. Either way. Second, we build apps and bots that are part of the digital marketing campaigns. And we also use the technology to collect the data and analyze it, which then informs the moderation and it informs the creative and strategy. So there's a loop between all three of these parts. They stand on their own with a little bit of value. Each is stronger because of the other. And when you integrate them, it's even more value for the client, and something that we do in a very unique way. David?
So let's talk a little bit about the market opportunity that we have here. So when we look at the actual marketing spend of healthcare companies, it's rather impressive. The most recent reports we have say that marketing spend across healthcare sector is approximately $30 billion, with pharmaceuticals making up approximately $16 billion and medical devices approximately $2 billion. Next slide. As I said earlier, healthcare-related revenues are about 90%, so we have a very strong position in healthcare. And today we manage over 300 healthcare-related properties, and we deliver over 90,000 hours per year of healthcare-related moderation and engagement. Our healthcare-related revenues have grown from almost $6 million in 2019 to almost $10 million in 2022. Importantly, this growth has come from not only new client acquisition, but also growth from our existing client base.
You might ask, how does the revenue grow? Well, it grows in stages. Generally, it starts with a smaller sell-in. That could be creative or moderation or tech license or project. Or sometimes we actually start with a client as their new agency of record for digital and or social media marketing. That first set of revenue can be anywhere from $25,000 to a few $100,000 a year. Whatever solution we sell in, we then look to pull along, upsell other things that we do. For example, we had a pitch for a creative digital agency RFP. In that, we brought up moderation as something they would need and would differentiate LiveWorld, and that's part of why we won it. But also, as we did that, we were able to expand the initial budget another $80,000 to about $300,000 a year. So it was both differentiation and revenue expansion compared to other agencies, none of whom really do what we do. As our programs do well, the brand will expand with us, adding more social media pages for us to moderate and or more user seats for the SaaS license or bigger creative programs. That can move the revenue up to a few $100,000 a year to well over $1 million a year. Once we're into a big corporation, another key revenue driver for us is getting work with more brands and more groups in the company. For example, we can add $150,000 to over $1 million a year by getting more different kinds of people. And I'll give you actual examples. When we began with Avi, it was a moderation deal for a few social media pages for one or two brands, say Facebook and Twitter for one or two brands. Then they wanted to add Instagram and LinkedIn. So that expanded the revenue. Then they wanted to add some additional countries, and that expanded the revenue. Then we started doing moderations for other parts of the company, including when AbbVie acquired Allergan, we picked up a bunch of brands. With that relationship and track record, we were able to pitch and win creative digital marketing for one of the brands we were already moderating, which was Synthroid. And with that credential, we were able to pitch parts of AbbVie we had never met on their new agency work, which is what they wanted. And we were able to grow over, say, 7 years, AbbVie, from starting at just a couple $100,000 a year to millions of dollars per year. Another example is Nutricia. Instead of moderation, this one started with creative. Nutricia is a division of the big Den Corporation. We started with their Neocate product, a specialty formula for kids with very profound food allergies. We did the creative for the social media marketing campaign. Next, Neocate had a new product coming out called Splash, and they asked if we could help with the digital marketing for that. And we got a bunch of business building banners and a micro website and email marketing and programmatic ads. We continued with yet another brand, Real Food Blends. And after that, we added ProStat and recently a brand called Souvenade. And these latest programs didn't just include creative, which is what we started with, but an upsell to moderation. So again, it shows you whatever we start with, we're able to upsell the others and we're able to add brands as a client likes our work. And because we have this unique offering, multiple different parts, we're able to grow the revenue by upselling and finding new brands. At Nutricia, we were able to double the revenue each year. And that's the question that we get is, well, how do you actually grow this from where we are today to a bigger number? So this is a scenario by which we could double the revenue of the company in 5 years. It starts by adding, say, 2 to 4 $500,000 a year accounts each year. And then over time, acquiring more brands and or upselling to our additional services. So each year we can expand that. You always lose some, but I'm talking about the net adds and get from 11 million to over $22 million. And again, when we're looking at our market, just in healthcare, there are over 3,000 pharma companies and over 1,600 medical device companies worldwide. And there are over 5,000 hospital systems just in the US. So we have a ways to go to explore and tap into our primary vertical market. David?
So let's talk a little bit about shareholder value and what we're doing there. Now, I know some investors don't like to hear management say that the company's undervalued, so I'm not going to say that. But if you will indulge me, I'll touch on some of the current fundamentals of the company. Now, if you look at comparable service company, a conservative valuation metric might be 2 to 3 times forward-looking revenues. We're not providing that kind of guidance at this point in time, but if you look at our trailing information, we did 11.1 million last year. We had over $1 million in net income and over 3.8 million in cash. And again, no debt. And we don't even reach 1 times revenue. At our recent stock price of say 17 cents and roughly 46 million shares outstanding, this results in a market cap of about $7.8 million or roughly 0.8 times. Now we have over 3.8 million in cash. If you remove that cash, the enterprise value is roughly only $4 million or 0.4 times revenue. Our goal moving forward is to bring the valuation in line to our actual value by continuing to deliver the unique value to our clients, growing our revenues, and now communicating our story to the investment community. So let's talk a little bit about the shareholder path to value and liquidity. So a few years ago, we made that conscious decision to focus on healthcare and expand into a full-service digital agency. Before coming back to the investment community, we wanted to demonstrate the value of those decisions and that we could actually grow the revenue and be profitable. Now that we've done that, we're stepping up our investor relations communications. Now we're looking to engage with the investor community in 2023. When the time's right, we'll look to move up to the OTC or NASDAQ and become a full SEC compliant company. But we plan to continue to grow our current market segments, add new ones, and we'd also consider growth through acquisition. So let's give you sort of the highlights of what we've gone over today. So we've got a strong client base, primarily Fortune 500. We've got long-term relationships, one for 16 years, others in that 10 to 5-year range, and a few others in the 13. We've got a proven business model. By providing digital marketing services and technology, our track record over the last 13 quarters has shown improved revenue, profits, and cash from operations. The growth opportunity is amazing for us. The healthcare market is huge and expanding, and we can actually grow through two different ways. One, upselling services, and two, expanding into other brands and large corporations. And again, primarily our revenue is annuity-based, approximately 70% being annuity-based from last year. And we've got a strong balance sheet. We just finished with approximately $4.4 million in cash at the end of Q1 and 0 in debt.
We'd like to thank you for your time. Hope you learned some more about LiveWorld, our business, how we differentiate ourselves in the market, and how we grow our revenue. And that wraps up our presentation for today. And I think we have time for questions.
Great. Thank you, Peter and David, for that overview. Appreciate it. Let's expand a little bit on a few topics. You have an amazing client roster, as you mentioned. Several of them are, if not all of them, are blue chip clients. How were you able to attract these companies, and did they find you, or did you find them?
Well, that's very interesting. The number one way we get a new client is word of mouth from the existing clients. Either they talk to each other or somebody leaves one company and then goes to the other. The second area is events and activities where we meet them at some kind of trade show or event or activity like that. And then the third thing is we have quite an extensive and expanding digital and social media marketing program of our own, where we're reaching out to people to engage them and provide them thought leadership content.
So I want to hit upon a little bit. There was a slide with regards to getting the company to double its revenue base. Can you maybe discuss a little bit how the strategy is to add a certain amount of customers or brands per year, and how you feel comfortable in doing so?
Well, we have kind of a multi-pronged strategy for that. First is the general model. The model is to add a client or 2 or 3 or 4 every year, probably at a small level, lock in a good relationship, and then grow annuities. So each year, there's a good chance we're going to have more revenue from current clients because we have the base and we're always growing them. You have the annuity, and those don't usually go away. And then we're layering on top of that with newer products, range of products, upsells, and finding new parts of that company. But each year, we want to add a few more clients to do it. Some years it's going to be a few, some years it's going to be more. But the key model is value. Get them in, provide solid value that grounds it, and then grow it.
And how's the visibility on your business? I mean, it seems like it's extremely good. Is there also any seasonality to be mindful of?
Well,
it's hard to tell. So, David, go ahead.
Oh, sorry. I'll answer that. So we do see a little bit of seasonality in the first quarter of the year. Typically, we'll see growth in the second quarter, substantially, and in the fourth quarter. That first quarter is more as a result of bureaucracy, of sort of having to get through the cycles with the various large organizations that we're dealing with. So we're dealing with getting SOWs in place. And then once we get the SOWs in place, we need to get the POs in place. And then, there's just sort of the standard sort of billing cycles that we're dealing with. So we do see a little bit of seasonality in that first quarter, but that's pretty much it. We typically will see continued growth in Qs 2, 3, and 4.
So that led into my next question. You just reported first quarter results. So David, maybe give us a little bit of a brief overview of what transpired then. Your balance sheet continues to grow. Maybe also explain, what if there's any eventual plans for the cash that you're accruing.
Well, we had a great first quarter. We did see, like I said, double-digit growth of almost 2.75 million in revenue, and we are maintaining our profitability. The cash, we did see growth as in the fourth quarter and in the first quarter. We definitely were sort of on top of our game as getting things into place, so we were able to sort of mitigate some of that cash burn that we typically see in the first quarter over the last 3 or 4 years previously. But that's great for the business. But again, we're looking at the business and saying we want to grow the business, and we need to have funds in order to do that. So We would be using our cash in the near future and foreseeable future to continue to grow the company.
So to conclude, just anything else you want to add before we conclude the discussion?
Just the value statement again. This company for 27 years, which makes it the longest standing social media related company in the world, has survived the downturns and prospers now because we focus on creating value for our customers and creating a good working environment and a valuable experience for our clients, our employees. And we believe that by having this kind of relentless focus on delivering value, the company has survived where other people doesn't. It's grown where other people don't. It's doing well now and expanding where other companies aren't. And in the long term, that creates value for our shareholders. So if you're interested in a company that has a value focus and helping us to build that value over the medium and long term, as well as the short term, we hope you'll take a closer look at who we are and what it can mean to you.
Great. Peter and David, thank you very much for your time today. We greatly appreciate it. So anyone out there has not already signed up for a one-on-one with LiveWorld, again, please send me an email at lowensteiner@lythampartners.com, or again, visit www.lythampartners.com/virtual and click the one-on-one meeting request button. We hope you all enjoy the conference, and thank you again, David and Peter.
Thank you.
Thank you.